Hello. In this video, I'm going to talk about the latest module to the Jackrabbit modulus framework, the moving averages module. Now, this is not a replacement for the Fibonacci moving averages in the main indicator. This is just a simple baseline linear moving average. We're going to start with the first type, which is the basic textbook crossover. We're on the 1 hour chart. Let's take this up to 200 days for the slow line, and we'll take this down to 200 hours and 20 hours. Help accentuate this a little bit better. The red line is the fast line, the green line is the slow line, and of course whipsaw is a problem. Now, with respect to moving averages, a new feature that Jackrabbit possesses is what's called signal deviation. I'm going to set this to 1% just to demonstrate it. Now you'll notice a lot of signals disappeared. That is, from the buy signal, the next sell signal must be 1% or greater deviation. So whatever you put in that box, that deviation is what separates the signal. Guaranteed, this signal is 1% away from this signal. When you have a sell signal, your buy signal must be 1% away from it. So the deviation is a way of forcing whipsaw not to happen. So here we have the standard crossovers, cross-unders. It buys when the fast line crosses under the slow line. It sells when the fast line crosses over the slow line. Completely textbook. Okay, so now let's move to the next one. The 37 rule. This is a unique one. It only uses the fast line. So we're going to put this at 200, and I'm going to pick a simple whole moving average. The 37 line is unique because it buys when the direction changes. So when it's coming down and then when it starts going up, right at that pivot point is the buying. Selling is just the opposite. The transition between an upward and a downward trend triggers a sell signal. So the 37 rule is a interesting little paradigm that follows the market. Now you'll see that the price action follows it very closely, so this can also be considered a path of least resistance. Now with the crossover, I'm going to go back to that for a moment to explain something unique about it. And that is the price action must be completely above the crossover point or completely below the cross-under point. So this is kind of an inbred confirmation to the marker, even though it does have whipsaw without a signal deviation. So very short, very simple, very sweet. And the 37 rule is your path of least resistance. A nice little way of tracing the market with only a single line. Works very well. So if you're looking to help tone down your signals, this is a good way to do it. So we'll set this here. There we are. '37 rule, right at the transition point. Right at the transition point, a lot of whipsaw, but you notice that it's not really showing you a lot because of the signal deviation. Let's take out the signal deviation. We'll move this over to 0. Take out the signal deviation. And now you should see the whipsaw. There you are. All of this whipsaw gone just by tuning this. So if you're looking for a way to avoid a sideways market, the 37 rule with a signal deviation can do that very well. Okay. Finally, we're going to talk about the last type of moving average, which is the momentum. Momentum is your textbook single line. Pretty straightforward. Anything below is a buy. Anything above is a sell. Did I say textbook? Well, I'm going to have to mess that up a little bit. Let's start with taking the fast line, or the upper boundary of momentum, to a high, and the slow line, or the lower boundary of momentum, to a low. And now we have a momentum band. But we're not done yet. We can actually do more. Because this momentum indicator is quite sophisticated. And it knows the difference. There we go. Now notice the fast line on the upper boundary. When it goes below the lower boundary, notice how it specifically looks at the price action. The price action must be completely under the lowest value. For your selling, the price action must be completely above the highest value. And in this case, the price action refers to the entire candlestick. If the candlestick crosses the momentum boundary, like right here, it is completely disqualified. So, your momentum now becomes almost like an Ikimoku state for the Kijun cloud. There's a lot of different things here that you can really maximize on and take advantage. For example, this is fast moving average. Let's go to a triple sine wave. So from a simple moving average to a triple sine wave. There you have it. And there's even more things you can do to this. You can actually make your slow line at a level of 20 and your fast line at a level of 80. You can look at 11-minute candlesticks. This is a whole new approach to momentum in the most basic form. Let's take yet another example. And let's go with something extremely aggressive. A zero lead EMA. Very aggressive, very fast. Let's go to the 1 minute. And let's amp up the slow line dramatically. Let's go to a 24-hour period on the slow line. Now you begin to really see a very strong filtering point that can be applied. So momentum is a unique offset compared to the traditional context. So as you're working and you're looking at your variables, take into account this situation. There are a lot of different possibilities you now have. And of course, this works with confirmation bias very well. So let's go through. I'm just going to see what I can find. So right now, confirmation bias is simply default to a crossover. So even without making any changes, a momentum barrier and a confirmation bias crossover, basically up here to down here, very nice little trades. So without going anywhere very fast or having to make a lot of changes, you can see quite a dramatic improvement with the way this is set up. Short, sweet, and simple. Don't be afraid to try different values because you have no idea, and even I have no idea what actually might work until you see them. Sometimes the simplest approaches can produce the best profits. Don't overcomplicate your situation. And when you zoom in, you see the darker colors. That is your confirmation. A darker red is your confirmation fast line. A darker green is your confirmation slow line. In a momentum's context, upper and lower boundaries. And you can have two momentums running side by side as a confirmation of each other. You can also have a momentum and a 37 rule, EMA or SMA or whatever. Any of the 27 different moving averages can be applied. You can use open and close as your boundaries, high and low, or any combination of the 7 sources supported. This moving average is different from your traditional moving averages in that you have a lot of flexibility that you can really build upon and develop at a much greater risk and rate. For example, open and close. And let's go to let's leave that as crossover, and let's move the first one to Rule 37 and see what shows up. Quite nice, actually. And this is without any real tuning. If you spend time tuning this, you're going to get some very nicely produced results. Now be aware that if you're buying up here and you're selling down here, it's going to be a loss. The only guarantee you have with the signal deviation is that you're going to be 1% difference between your buying and your selling markers. That doesn't guarantee direction, just because there's no way to guarantee which way the market is going. So take your time, look at each of the different moving averages, try them out, play with them, see how they work, see what levels you have actually available to you on a basis of what you're trying to achieve. Remember to find the right tool for the right job. Just because you have 5,000 tools in your tool chest doesn't mean you need to use all of them at once. Until next time.